And the U.S. stock market is officially open for trade. We are off to the races. Joining me now is Ted Thatcher, founder of Bright Lake Wealth Management. Ted, welcome to NYSE Live.
It's great to be here, and it's so fun to see the markets and some positivity this morning. You know, when you look at what's going on in the Middle East, it's like we're in a war against time at this point with everything around the oil discussion and the inflation discussion. We see Brent this morning at $100 a barrel. And so, my goodness, I think you miss a little, you miss a lot. We're all trying to stay on top of it, right?
Well, we saw the markets rise and we did see a downward GDP revision. Can you talk about how that might impact Fed decisions moving forward?
Absolutely. It's a really important discussion to have. And I'm really looking at it several fold. When we think about growth and the economy, we think about how that affects consumers. And we really have to have a discussion, too, I think, about how earnings have grown or not grown for consumers. I think quarter to date, so far this year, we've seen earnings growth in a positive direction. We saw also PCE prices and core come in this morning. 2.8% for PCE prices, 3.1% for that core number, which we know is what the Fed keys in on in the inflation discussion. So if you look at the report, actually, the details show us that the trends are in the right direction, but I just don't think the Fed is going to like that 3 handle, certainly with the 3.1 behind it. And so when it comes to a rate discussion, it's hard for me to see a path toward, lowering of interest rates, even just because of that, until the second half of 2026.
What is your outlook for the Fed for the rest of the year?
I do think it's likely, that we will start to see some more rate relief. Obviously, it has to dovetail with the discussion around unemployment and where those numbers sit. Obviously, unemployment came in hot at the latest print, moving from 4.3% to 4.4%. I would say unexpectedly. We saw those trends coming down. We saw, obviously a lot of good numbers from the CPI this week at 2.5% for core CPI, the lowest number it's been in, I think, 4 years now. But when you compare those, I would say even positive data points to the macro discussion that's being had right now, because of the geopolitical conflict we have in the Middle East, it's hard to see how the Fed is going to feel the ability to move until it has clarity around what the ultimate consequences of that war in the Middle East is going to be.
All right, and diving into those PCE numbers a little bit more, what was your takeaway from this morning's report?
Yeah, I really was focused on the core number. Again, coming in 3.1% year over year. That number, as we've noted, it really is what the Fed keys in on. Now, if we look under the hood a little bit, that's where I think that we see some more important pieces of data. If you see and you look at the trends there is good data supporting a trend in the right direction with inflation. And so that is what I was looking at this morning. Obviously, I want to see, what happens here with the price of a barrel of oil, because at this point, I think so goes the price of a barrel of oil, so goes the inflation discussion, and therefore how it affects consumers here at home.
All right. And for the viewer, why is PCE data the Fed's preferred inflation gauge? Why are they so dependent on that number?
It's a really important thing to understand, actually, because effectively it filters out, the price of energy and some of the more volatile pieces of what contributes to the consumer pricing index and prices more broadly. So when you get to filter those things out, effectively, you actually get a more accurate view of what consumers' day-to-day life looks like. And at the end of the day, when we look at the economy, we have to have a conversation not just about Wall Street's valuations, but we have to have a conversation about what's going on in the consumer's day-to-day life. And so that's our technical way of getting an idea of what's going on there.
All right. And switching to the Middle East, ICE Brent crude oil is hovering around $100 a barrel. What should investors know when it comes to oil prices and production?
When we look at oil production, I, of course, am thinking about the report that the agency, the International Energy Agency, of course, led by the U.S., put out this week. They said that we are now looking at the single largest disruption in the oil supply in history. And so, of course, when you have that big of a disruption, you're going to see huge consequences in the price of a barrel of oil. At the end of the day, when we look at this conflict, we are still in a really important stage of it. That being the stage of conflict pricing, the market hour by hour trying to figure out what is going to happen and what is the path forward. Obviously, the administration is trying to get us to turn the corner into the next phase, which will look like controlled de-escalation. Obviously, Trump has mentioned the Navy potentially ushering ships through the strait, talking also about putting more money into the reinsurance programs from the U.S. And of course, the IEA also announced this week the 400 million barrels of oil that they're going to be releasing from the strategic petroleum reserves, trying so much to get us into that controlled de-escalation conversation. But when I look at Brent at near 100, I just don't think that the street is buying that narrative just yet.
All right. Thank you, Ted Thatcher, founder of Bright Lake Wealth Management, for joining us on NYSE Live.